everybody. Welcome to the Dollar Vigilante TDV special series of interviews where we're interviewing a number of market aficionados, including in the past Jim Rogers and Rick Rule, and we're going to have many other great people on. We got on today David Morgan of the Morgan Report, which you can get at silver-investor.com. David's been in the silver market in particular for decades, and he is one of the most respected people in the silver market. And I think silver is very interesting at this moment in time, as well as the entire market as well. So we're going to get into a lot of stuff about precious metals. We're going to get into the markets as a whole, and we're going to get into some of the mining stocks as well, and talk about where we're at with that. I'm predicting that we're going to have a very volatile, incredibly volatile rest of the year coming up. And so I want to get the perspective of some of the smartest minds in the markets at this moment in time, because I think this is really important. So David, first of all, thanks for coming on. And let me just ask you in general, just a very general question just to start. What's your take on where we're at in the general markets right now?
Well, we're very topped in the equity markets. I mean, the Dow, the S&P basically have done all they can do, which doesn't mean they can't extend further for a few more months, and they probably will. But from any metric you use, from a price to earnings ratio, from an overbought situation, from a amount of margin debt, I mean, almost any way that you look at a market from an objective standpoint, these markets are so overvalued that when they do break, I think it's going to be a pretty hard break. Right now, they're showing what's called a distribution pattern. And I forget the name of the book, but I have several behind me, as you may or may not be able to see. I actually can't see my bookcase that well. But the point being that I have studied this stuff for years, continue to do so. And some of these technicians are actually very esoteric, and very few people know about them. And one in particular I'm referring to, again, forget his name, was taught me about the accumulation and distribution patterns. And now that I know what they look like and what they are, it's when the professionals are actually feeding off their gains to the public at large. The public isn't in this market as big as they used to be, because so many people have been decimated during the 2008 crisis. But nonetheless, there's fund managers, there's mutual fund managers, money managers, et cetera. So they can feed off their gains into these hands, let's say. And once they have fed this stuff back at a high price, that's when they're willing to go short and take it down. So having said all that, Jeff, a long-winded answer as usual, let me just say that I expect that the September, October timeframe, 7-year cycle, et cetera, that's kind of one of the main things I'm looking at for what's coming up this year. So I don't think this market's going to look that good by the end of this year.
Yeah, let's talk about the 7-year cycle. This is something that I caught on to about a year ago, or approximately a year ago. And it was, this book had come out. It was called The Harbinger by, I think his name is Joseph Kahn. He's a rabbi. And I've always been interested in what happened around 9/11, because we definitely were not told what really happened at that time. And they've been keeping a lot of things secret still. And you see these congressmen coming out now and saying there's a bunch of documents they're not releasing, because if they released them, it would shock everybody about who was really involved. And he started mentioning about something called the Shemitah, and he mentioned that this is a Judaic thing, that every 7 years, and if you look at the Bible or you look at the Talmud or the Torah, they always talk about God created the world in 6 days. On the 7th day he rested, and we still have to this day, we have 7 days in the week, and all sorts of things related to seven. And in the Jewish religion, every 7 years is called the Shemitah. And in the religion, they say that in the 7th year, you're supposed to wash away all debts. There's supposed to be just this washing away of things. And, you know, you could just look at that and say, okay, that's fine. That's sort of someone's religion, or it's just something. But in 2001, on the exact day of the end of the Shemitah, so the final day of the Shemitah, was the day the New York Stock Exchange opened on September 17th. And was down, I believe, 7%. And that, of course, was right after 9/11. So that was quite interesting. And then on 2008, when the Shemitah, the very last day of the Shemitah again, the markets had another major collapse, and I believe it was down 777 points on that day or something. All these dates and these numbers just seem to come up over and over. And of course, there's a lot of Jewish people in the financial markets. So, and there's a lot of talk always about the 7-year cycle. So there's something to it. So I'm paying attention, and I've done more and more research, and I'm going to be releasing a lot of that research at the Dollar Vigilante about how I'm expecting something big. They're planning for something big coming up this September. And I'll just give you, sorry, I'm interviewing you, but I'm so interested in this that I just want to get this information out there. But this year, the final day of the Shemitah, so we're in another Shemitah year now, is on September 13th. And that's a Sunday, I believe. That week has a number of really interesting things. The day after that day, the Pope, I believe, is going to be speaking in Congress. The day after that, almost all the world leaders are going to be in New York, including possibly Vladimir Putin as well, all meeting during this week. There's a number of big things happening. This Jade Helm that's going on is it's scheduled this total military thing in the U.S. where they're just putting tanks all over the place. It's a drill that's supposed to run until September 15th. There's all these September 13th, September 15th, all these dates. There's something big sort of collating around that time. What's your take on all of that?
Wow, you said a lot. I'm glad you did. Well, it's interesting. At a Liberty Mastermind that you and I were at together, one of the people came up that was partial to me in particular, but of course there for everybody. And he told me about the Harbinger and said he'd send it to me. And so I kind of held his feet to the fire and he sent it to me and I read it. And what he was really intrigued about was the date. And he said, you know, I really like your work, David, and this will give you kind of an edge on some of the other guys because you'll know the date where we're going to have this crash. And so I read the book. And then, of course, knowing, you know, who the author, Jonathan Cahn, I thought, wow, that's interesting. And so I discovered he'd written this other book, The Shemitah. So as soon as it came out, I ordered it. In fact, I think I pre-ordered it. And as soon as I received it in the mail, I devoured it. I went through it very, very quickly. And I thought, wow, isn't that interesting? You know, September again. And so I don't rule any of this stuff out. I mean, you know, I don't want to lose any credibility, but if you're really open-minded, that's what it means. You're open-minded. The other thing with my age and being in the markets for so long, I won't say kind of, I do believe in self-fulfilling prophecies. In other words, when a lot of people, especially knowing like how the traders operate in Chicago and New York, et cetera, if enough of them believe that something's going to happen at X time, they almost make it happen. Mm-hmm. I can't explain it. I'm not a psychologist, nor do I wish to be. But so all that stuff. So one, it's interesting that this guy came up at that same venue that we were at. I certainly looked at it. I think there's a lot of stuff that will take place around that date, and whether or not it's because of everything that you discussed, or it's just because so many people believe it'll happen anyway. Regardless, I'm preparing for that date. I think it's a good time to look at, and you know, you want to be early in the markets. I mean, whatever your personal plan may be to just have a minimal amount of cash in the bank, for an example, you want to have that in, you know, July or August. I mean, you don't want to wait till like September, you know, 11th or something. You want to have a date well in advance. But I think it's good that we're discussing this kind of thing because, first of all, that book is very popular. A lot of people are aware of it. And secondly, it coincides with some other cycles, again, being the stock market cycle, which is what I look at primarily. And the last one is the overall picture from a fundamental aspect, and that is that the controllers at large are not bigger than the market. I mean, there's a very few of them, and there's a very lot of us. And so we are actually the ones that have the power. Yes, they control, and they have their methods and rules and these exercises and everything you alluded to, Jeff, and more. But nonetheless, they do not have the ultimate power. In other words, if enough people opt out, get out, withdraw their money, et cetera, it can cause great repercussions. And then there's the diminishing returns. I mean, look at the QE, how much money's been pumped into here and what good has it done? Absolutely none other than the banking system itself.
Yeah, I think that was a really good point. All your points were good, but I think it was really good that you pointed out that there is self-fulfilling prophecies to an extent. And I think that's also a good point that if enough people sort of wake up to something that these people may or may not be planning in one way or another, or making happen through self-fulfilling prophecy, that we can actually stop something really terrible from happening if enough people wake up. Because if they do have some sort of plan, and let me give you a few other examples of things that, you know, once you start to look into these things, you start to find things It's quite amazing. So I just typed in, this is just recently, I just typed in the date, September 13th, into Google, and just thought if I'd see anything interesting. And that's when I saw that the Pope's speaking at Congress the next day, that the UN's having their 70th, what they're calling it, the Jubilee at the UN on the Tuesday of that week. Then I started to realize that the Federal Reserve just announced it's moving most of its operations outside of New York right now because of concerns about a natural disaster. That's interesting. No, of course, the mainstream media, as always, doesn't ask any questions. There should be one question after that. It's like, why do you think there's going to be a natural disaster in New York and not in Chicago? What are you expecting here? Then, of course, the U.S. has been just buying up so many rounds of ammunition. They're doing their Jade Helm right now. Then there were also, if you look, I started just looking into it, and Christine Lagarde last year, the IMF head, did a weird 7-minute speech on the number 7 that was just talking all about numerology last year. And then the French foreign minister last year also said in 500 days, there's going to be a global climate catastrophe. He said 500 days exactly, and he was like quite serious about that. I looked up the dates. If you looked at the date he made the speech, 500 days from then is September 13th. Of course, the mainstream media, here's the French foreign minister saying, yeah, I think the world's basically going to be destroyed in about 500 days exactly. I think the first question would be, why do you think that? But no one asked any questions. And there's something just weird going on. But your other point also is excellent. I make that same point. It doesn't really matter too much as far as what we do, if we're onto something, or if we're crazy on something going on in this time period, because we've already been preparing for a major market catastrophe. So I'm not actually changing any of my behaviors too much based on this new information, because I'm already prepared for what I expect to be just a huge paradigm shift and a total crash and the end of the monetary system as we know it. And I think it's coming soon. We look at all the charts, everything looks crazy right now. And let's talk about silver and gold. You're an expert on silver. Are you surprised, or have you been quite shocked to see how poorly silver's done over the last few years?
Yes. When we were in that great parabolic move, and luckily I caught it for our members, in fact, both ways, as an investment aspect and also trading. And I'd only started the look over my shoulder service that I call the Basic Plus service, I think for maybe a year or so. It was fairly new. And we were trending in basically an accumulation pattern. And I said, when we break to the upside at $19, you definitely want to be long the silver market. So it broke out. I got in. I told everybody I was getting in. So we went from 19 up to about 26. And then we started to stall out, and I actually took my position off. Now, when you have a $7 move in a commodity that's leveraged, you're making some pretty significant money. But, I've read these markets for years, and I don't always get them right, Jeff. I'm not trying to apply that. And this one, I got near perfect. And, lucky me, or, whatever, skill, luck, combination, doesn't matter. The facts are the facts. So it started buzzing around the 26 level, and then QE2 was announced. Well, if you believe what I believe, or I'll say /fact, about silver and inflation, silver responds more to inflation than almost anything. Maybe soybeans is a close second. The point is that I said, I'm getting back in. This thing is going higher. QE2 is announced, and sure enough, we ran from 26 all the way up to 48, and I got out very near the top on my trade. Now, the day after I exited, I didn't jump up and down and say, look at all this money, blah, 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 and by the way, we should go short. I usually just trade from the long side, because if I short, I'm going to get a lot of flack from, anyone that knows me. Well, you don't like silver now, or all that kind of thing. But hedging's a different thing. I recommended hedging to a few people. But getting to your question, I really thought, after looking at the chart and the move and the volumes and everything else, that we would have a 2-year consolidation. So I started telling that to, my members, of course, first, and then, of course, the public domain as well. And then I thought, well, maybe it could drag into 3. But not in my wildest dreams that I think it would go on for 4 years. And we're reaching the 4-year mark at the last day of April. That will be the anniversary of the silver takedown. So it's today. It's while we're doing the show, May 1st, 4 years ago. So this is the fourth anniversary. Sorry, I misstated it. So today is the anniversary of the silver takedown of exactly 4 years ago. So no, I didn't think it'd go for 4 years. I have a hard time finding out how the physical silver market is able to maintain enough quantity for the demand side. But the demand side in large quantity investment-wise has not been there for quite some time. And it's rather frustrating to me, Jeff, because you've got very smart guys like Eric Sprott with the PSLV, Stefan Spicer from the Central Fund of Canada, you've got the Zurich Continental Bank, you've got some of these what I call silver holding companies, and none of them have stepped to the plate and said, give me 20 million ounces of physical silver or 30 million ounces of physical silver. And I really think that would be just, one, it's a great time to do so. And secondly, it would really test the physical market enough to find out how tight the supply is. I know it's much tighter than the price would indicate, but how tight we really can't, or I can't anyway, quantify exactly what it is. But it is frustrating, but I also know the end chapters of how these monetary crises unravel. And we're going to see a big rush into the dollar, which we've been witnessing, prior to the big run-up in the metals. So people are very upset for the most part. The dollar's this, the dollar's that. It's going higher and higher and higher. And all of that is exactly what I expect to see before we see a move from the dollar and an exit out of the dollar and a huge rush into the metals.
Yeah, I agree with you. I'm also surprised at how long this has gone on, and I hate to always look for reasons that pointing out the 7-year cycle perhaps has something to do with that. But I'm shocked when you look at everything that's going on for the last 7 years. Everything that's been going on. We've been in quantitative easing to infinity, QE to infinity, since I think it's about 7 years now. We've been in 0% interest rates in the U.S. for about 7 years, and even them just talking about raising the interest rate 0.25% causes massive chaos and panic. So they can't raise rates ever again unless they want to have a complete and total collapse. There's so much debt now. You have massive amounts of debt. All the governments of the world are insolvent. They're just totally bankrupt, and massive amounts of debt. What happened in 2008 was we started to see a collapse, and all they did was they started printing money. But back then, the total amount of debt, I believe, approximately was around 70 trillion amongst the governments around the world, and now it's over 100 trillion. So it's gone up nearly 50% since that time. So nothing's been fixed. We're seeing Greece coming back around again. It's almost like it's just like the same thing that happened in 2005, 6, 7, all just coming back again, and now it's way worse. There's no answer to fix this problem. It has to just be a complete collapse at some point. Would you agree with that?
I think at this point, yes, I agree with you. There's really no way out. The only thing they know to do is what you just outlined. They have no one's got the guts to stand up and say, the truth. And the truth is it doesn't work. Printing money isn't working. For a long time, Keynesian economics works. I mean, you prime the pump and you stimulate the economy and on, and that works for a while. But this thing is so far in outer space as far as where we've ever been before. It's really reminiscent of what the Weimar Republic did as far as the quantity of money, although it hasn't hit circulation because they had a different situation with, the banking system was different, didn't have electronic money and electronic transfers, et cetera. But nonetheless, it's on a global basis this time. And that's what I wrote about in the early 2000s was not only am I concerned about the monetary system at large, but the phenomena that took place in 1980 when I was, in my 20s, was really a U.S. phenomena only, but this time it'll be global. And when it's global, there's no exit. And of course, the BRICS are making very good, I think, moves to try to exit the dollar. But in a dollar collapse, I'm not sure that even the BRICS will be that well protected. They may be, but there's so much still tied to the dollar, even with the BRICS countries, that I don't think that they can really exit enough to where it wouldn't have a massive effect on them.
Yeah, we're seeing, of course, you talk about the BRICS. Russia has been buying a lot of gold lately. They've also been selling all their U.S. treasuries. They've sold about half of what they had in the last year. China has been a net seller of U.S. treasuries. They're also a huge gold importer and producer. And they just started up their own financial system, essentially, their own competition to the SWIFT, which is the way to transfer dollars or any sort of fiat currency around the world, called, it's their Chinese payment system, something along those lines, chips they call it. So yeah, if you're paying attention, people are starting to get prepared here, and it's going to be very interesting. Let me ask you about mining stocks. Are you a buyer of silver mining stocks right now?
Still, yes. We've certainly done our best, but that doesn't mean, in this environment, it's tough. There's a couple one or two that we actually had to drop off the list. But we replaced one with a company. It's up quite substantially, and that's saying something in this market. Also, on a positive note, we're the first to note zinc as a base metal, and that's one thing about the Morgan report that most people that aren't members don't really realize, and that is that we specialize in gold and silver, there's no doubt. But we look at everything in the resource sector, and we look for value. And we saw a lot of value in zinc, and we found a company that we recommended quite some time ago, and it's up quite substantially from when it was recommended. And we just updated the zinc report in the May issue that comes out today, by the way. And that is a company that we think has a lot further to go. And also another suggestion that we're not going to put in the portfolio right now, which has an interesting history. It's a base metal situation with a huge silver credit as well. And what's funny, and I'm going to digress here a moment, but you'll probably get a kick out of this and the viewers as well, but I met the manager for the Hunt Brothers quite some time ago. In fact, the guy that introduced me used to be a floor trader in Chicago in silver, and a really nice guy. And we were having one of these after dinner events, as you're very familiar with, after a speech somewhere. And so I meet this guy at the bar and we have a chit chat. And what I found out was a lot of things about, the inside of what happened during the Hunt fiasco, but a lot about the mining side that Bunker was interested in. And some of them I knew because they're in the public record, and some of them I didn't. Anyway, this is one that he told me very early on, stay away from this one. Don't get near it. We wish we never heard of it. It's got so many problems with where it's located, with environmental issues because of, the people around the area, et cetera. Whatever you do, don't recommend this company. Well, things change over time, as we both know, and most of those issues, if not all of them, have been addressed. So it's a very interesting play. I'm not trying to push the stock or anything. In fact, I don't own it. I'm not sure I'd buy it. But it's funny how things unfold, and how interesting these paths are that you and I are on, seeking the truth, looking at the metals, particularly me on the silver side, the kind of people you meet and the kind of situations that come up. So I just thought I'd, add a little story there to you, Jeff, that these things are very, very fascinating. And again, we addressed this in the latest issue.
Yeah, that's great. Our Dollar Vigilante is coming out today too, and I'm going to be talking a lot about this Shemitah stuff and a lot of more research I've done on it, and also how to protect yourself from it. And talking just a little bit more about what's going on, you can really see that they're trying to get rid of cash right now. We're seeing, I think Chase Bank has made it that you can't put cash in their safety deposit boxes anymore, or gold or silver. That's interesting. Now, of course, we're heading into negative interest rates, which is Keynesian craziness on steroids now all around the world. So many countries are now into negative interest rates. So now if you put your money in the bank, they charge you just to keep it there. That's sort of a flip-flop from the way it should be, or way it has been for a long time. And so I really think they're trying to clamp down right now. I think everyone knows there's a crisis coming, and they're trying to just make it so you can't escape from it, really, in my opinion, because they're making it harder and harder to even take out cash from many banks. I've heard, and you probably know this story, and I'm sure you know it much better than me if you do. There was, I believe it was a a fund, like a mutual fund or something in Switzerland. And because it's negative interest rates there now, he actually wrote that he wanted to take out money from the bank and just store it in a vault somewhere because he'll save money, because he has like $1 billion there. And so he'll save like $2 million a year or whatever it is. And the bank said, no, we're not going to let you take it out. Did you hear about that one?
No, I missed that one. That doesn't surprise me. I mean, even you know, a modest amount of cash. I mean, let's face it, the dollar has depreciated so much from the time that the Fed was founded. And yet, if you go in there, it depends on the person, depends on the teller, et cetera. The teller has the right to ask you what the money's for. So you go in and say, you know, I want $2,000 in cash, as an example. So, well, what's it for? What are you doing? I mean, you're like a criminal trying to get, quote unquote, your money out of the bank. But that's a misnomer, because once you deposit, it's a liability to you, and it's really their money. And check your contract. So, you know, I try to teach everybody that the best thing to do is keep a minimal amount of cash in the bank to pay your bills, make your mortgage payment, whatever your obligations are, but save in the precious metals, or at least in some type of tangible wealth. I mean, I'm not a big fan of real estate, but the right real estate or income producing real estate that you've got great equity in and you're making positive cash flow on, that's fine. You know, I mean, I'm going to digress here again, Jeff, so excuse me, but one of the kind of upsets me about the precious metals community is this tired old adage that gold is the only asset that is not simultaneously someone else's liability. That's not true. If I had a pile of copper in my backyard paid for, that's an asset that's not a liability. If I have a pile of plywood, for crying out loud, that's paid for and protected properly, that's an asset that's not a liability. So basically any hard good, even a soft good, even cocoa or sugar or whatever, fully paid for is an asset that is not someone's liability at the same time. Now, you know, if you do the softs, obviously you've got more problems than something hard like a metal, but nonetheless, gold isn't the only thing out there. There's lots of tangible wealth out there, you know, really and I'm going to digress further and come back to you, but, you know, really something that no one ever thinks about, and you've probably never heard this before, Jeff, that really a great commodity to own fully paid for that the average person could do in dire straits is soap. Believe it or not, bar soap and laundry soap is something that sometimes gets very scarce during hard times, and that's something that everybody needs. So, you know, I'm just trying to expand people's thinking, because a lot of people just kind of go along, listen, and they look at shows like ours, and they look at it almost as entertainment. But you and I are not joking about this. We really see it coming.
Yeah, absolutely. It's interesting times right now, and talking about assets that you can buy, it's going to be very interesting. There was one, it's been interesting to me to see that I've been noticing now, and I'm writing about this as well in our newsletter, but that there's a sort of this theme going on that, and this one big money manager came out and said that he thinks that buying condos is the new way to store wealth, and he says that gold and silver have lost their luster, and we're seeing a lot of real estate bubbles, just massive. There's homes for sale in where was it? It was in Monaco. They have this new building. I'm writing about this as well. I'm doing a lot of things, but the building is just a condo building, but it's very, very nice. It's incredibly nice. But the penthouse is for sale for $250 million. That's just a condo, okay? Yeah. And then the rest of the units are about $100 million. And people are putting their money there because I think people, smart people, are realizing that they have to actually own something here. All this paper is going to turn to its actual intrinsic value fairly soon, especially bonds, because of course, with zero negative interest rates around the world, if interest rates ever do go up, then all those governments be insolvent in a second, and then that'll collapse the financial system, the central bank, and then they'll have to, if they want to keep going, they'll have to print money, which turns into hyperinflation. So there's no real way out of this except for hard assets. And it's interesting that you brought up real estate. I think real estate in some countries is a good idea. There's a lot of countries that are very undervalued. I definitely wouldn't be buying condos in Vancouver or Toronto or Monaco right now if I could afford it. it, or London or New York. But here in Mexico, there's tons of value. Here in Acapulco, even there's you can buy. Every time someone comes down, they're shocked at what you can buy for compared to a place like San Francisco. For what you could get for like a 500 square foot bachelor pad in San Francisco, you can buy like a 6-bedroom villa here on the beach, and it's beautiful, of course. So yeah, sorry, I'm not very good at this interviewing thing. I talk way too much, but you talked a fair amount as well, and it was very interesting. So I'm glad we had this conversation. Let me just finish up by asking you if there's anything else you wanted to talk about, or if not, why don't you let people know where they can get more information on what you're doing?
Yeah, I'm going to turn around here for a second, and I'll just do a shameless promotion on the new book, Silver Manifesto. And then, of course, the first book I wrote, which is a primer called Get Skinny at Silver Investing. Most information of this needs to be updated, although there's a chapter in the book about the photography myth that's still very viable to the silver investor that most people don't even know about. But the new book is Pride and Joy, just published. It's on Amazon. There's
we'll
also
put the links down below to that if you want to get that.
Thanks. Yeah, and there is a landing page called thesilvermanifesto.com if you want more information. So, no, I appreciate it. I don't really look at it as an interview. I know you too well. I look at it as a conversation. Of course, we went all over the map. But I think I'll add one thing. It's been on my mind a couple times during this conversation on interest rates. Most people don't really understand interest rates thoroughly enough to know what happens. But I lived through the first huge interest rate spike that Paul Volcker enacted. Now, what people don't know is that there's what I call the true interest rate. So if you have a real inflation rate of, say, 8%, which is about what John Williams puts it at, you're not even going to get a real return on your cash until you go above that interest rate. Now, there's no way, as you said several times during this conversation, that anyone can raise their interest rates hardly at all without crashing the system. And I totally agree with that. However, I might give it a little bit more room than you, that perhaps they might be able to raise interest rates to 1%, maybe 2%, which is their purported inflation rate, which of course is an absolute and total lie. But you might be able to get it to that level. I'm not saying you could. The market knows more than any of us. The point being is you're never going to be able to get an interest rate that gives you a real rate of return, ever. Not until there's a reset in the system. And that is coming. And how it unravels, how it unfolds, I don't know. But what I do know is that history teaches us a very important lesson. And that is, if you want to save, you save in real things. If you want to be destroyed, believe in the system.
Yeah, absolutely. And I think it's getting very close to something very big happening. And so if you don't know about a lot of this information, you should just sort of pay attention. Just go to our website, the Dollar Vigilante, dollarvigilante.com. We have a free blog on there. I write almost every day. As you can tell, I talk quite a bit and think quite a bit and write quite a bit. But I'm just so, not only just interested, because I'm definitely, that's my biggest thing. I'm just curious. I'm so curious about how everything works. But I also am just passionate about these sort of things. And most people don't know what's going on, and they're going to get hurt if they don't wake up. So we're just trying to help people wake up as much as possible. So I'd like to thank David again. If you didn't know about him, he's just one of the best people in the precious metals markets. He's one of the best speakers I know, if you ever get a chance to go to a conference where he's speaking at, and just an all-around great guy. So that's it for this edition of TDV Interviews. Keep safe out there.